Depreciation rates for FY 2023-24 under Income Tax Act. The concept of depreciation is allowed under the Income Tax Act. Depreciation under the Income Tax Act is a deduction allowed for the reduction in the real value of a tangible or intangible asset used by a taxpayer. What is depreciation? The concept of depreciation is used for the purpose of writing off the cost of an asset over its useful life. Depreciation is a mandatory deduction in the profit and loss statements of an entity using depreciable assets, and the Act allows deduction either using the straight-line method or written-down value (WDV) method. The calculation for depreciation under the WDV method is widely used. However, in case the undertaking is engaged in power generation or its generation and distribution, there is an option to choose the straight-line method. In certain circumstances, the Act also allows a deduction for additional depreciation in the year of purchase. To read about additional depreciation, visit Additional Depreciation under the Income Tax Act. Written down value WDV of assets, meaning, as per Section 32(1) of the IT Act, depreciation should be computed at the prescribed percentage on the WDV of the asset, which in turn is calculated with reference to the actual cost of the assets. In the context of computing depreciation, it is important to understand the meaning of the term WDV and actual cost. WDV under the Income Tax Act means where the asset is acquired in the previous year, the actual cost of the asset shall be treated as WDV. Where the asset is acquired in an earlier year, the WDV shall be equal to the actual cost incurred less depreciation actually allowed under the Act. Amount of depreciation allowed. The depreciation is calculated under the WDV method. The depreciation rates are given in Appendix 1. Except in the case of undertakings engaged in power generation or its generation and distribution, such undertaking has an option to claim depreciation on WDV method or straight-line method, if such option is exercised before the due date of filing the. In the case of amalgamation or demerger, the aggregate depreciation allowance shall be apportioned between the amalgamating and the amalgamated company or the demerged and the resulting company. The aggregate depreciation would be computed as if the amalgamation or demerger had not taken place. It shall be apportioned based on the number of days the assets were used by such company.